what is your what's your biggest niche market in your business today, and what's your strongest differentiator?
So our differentiator here is, so we do IT services that I did before in my career. I do managed services and network infrastructure, cloud projects, things like that, right? But I felt like there was an opportunity to do something interesting. So we have a division that is we call it our talent division, and we help find full-time and temporary help for companies. So I got the idea of, when I was at my last company, we had a CFO leave, and I needed to hire a new CFO, and my accounting firm helped me find that CFO. Mm-hmm. And they helped interview the CFO. And so that accounting firm, I think it was McGladrey or something, they really knew us, right? And they understood how we worked and what was important to us and our reporting and our tax situation. They really knew us, right? So they were ideally suited to help us find someone, or at least interview the right person and make sure that we hired the right person. So I always was intrigued by that concept. So I took that concept to this company. I said, who can hire IT people better than us? Right. I would have my IT people interview them. I would interview them myself. We would know the right place to look. So that concept really, really worked. And 30% of our business is this talent acquisition, where we help companies hire people either full-time or, I need a guy for 6 months type of thing. Sometimes you need just a contractor or someone to work for 6 months to do a project and then leave. So we do both. And that's been our niche, right? We don't know of any other companies, I'm sure there are, but not a lot, right, that mix those two things. Sure. And that's what we do. And it became so successful that now we do it for not just IT people, but we've hired HR directors, we've hired marketing and salespeople. But I think I kind of lend on my background and my two partners' backgrounds to help interview and find those people as well, because we have a lot of great business background, the three of us. So it's worked out really well. That's our niche. That's our kind of differentiating factor. One thing that I don't want to do, unlike the other ones, the other companies I kind of build to sell, we never want to sell this company. We're going to try to bring our kids into it. My son works here. My partner's son works for us as well. And we never want to sell it. We're still very earnings focused, like I was before. But I also have no plans to expand outside of Chicago. We just want to stay in Chicago and not let people be away from their families. So
Dan, when you look at that, though, I mean, so for us, we've only sold a few companies here or there, but for us, I believe that we always build these businesses for great enterprise value to sell. If it's a great business that people want to buy, probably means that your enterprise value, or your niches are strong, your profits are strong, right? And you don't need the owner or whatever to be part of it, right? You have to replace yourself as the main decision maker, let's say, right? So when I look at these businesses that we're building, I always want them to build them to be sellable, very valuable in a sale, let's say, for the compared to the rest of the market. We want to watch the enterprise value on a constant basis, even if we never want to sell. Do you feel the same way, or how do you look at that?
I think it's great. I did it 3 times, right? I've been involved in 3 sales, and I probably bought 3 or 4 companies too. So I think it's all good. I think it really relates. It's a very difficult decision. Whenever I work with a client from a strategy standpoint, I always kind of take them through this. It's really more of a personal decision, I feel, than it is a business decision. Things will certainly change if you decide to stay and sell, or you sell half of it or whatever. But I believe that if you are very focused on earnings like we are, and you're focused on continual growth and earnings growth, and you can take those principles and keep letting them happen and having them occur, and pushing those principles down to your management team, that company can continue to push out profits. And if you want to step away, you could step away and say, just send me a check every month, right? And
Sure.
have that earning stream. I feel like sometimes, that a big amount of money that you would get from sales is nice, but almost better is continual stream of income.
Mm-hmm.
It just gives you more choices, I feel.
So I guess what I'm looking for, when I think about this, how do you look at this? Do you look at it any different though? I heard you when you built the first few companies and were part of building those companies. You built them to be ready to sell, to be great acquisitions in a sale.
I did.
Okay, but really, is there much difference in building a company that you're never going to sell? Because you still need the profitability, you still need to differentiate strong and to create value. It's almost the same thing, whether it's short term and a sale in 5-6 years, or long term and continual value annually, year after year.
I think it depends on the company. I think that for our type of company, for professional services business, a buyer typically wants to see good earnings growth, enough working capital, and a strategy to put in place that's been put in place that will help it continue to happen in the future. So if I were going to position my company for sale, I would really, really drive earnings up, short-term earnings, where if I were going to sell it, I would not be worried about short-term earnings. I would be worried about long-term earnings sustainability and growth. So I would take some of my earnings and I would reinvest it in the business. So let's, my business made, let's say $1 million to make the math easy, and pre-tax income. I might take 500 grand and go start something else and not have to, spend every last dollar or bleed all that money out for myself. I would, or my partners, I would, want to reinvest it. But if I was going to sell it, I would not. I would leave it in there, and I would keep trying to reduce my overhead cost and drive earnings, and I would just be making shorter term decisions. Sure. To drive earnings. So that's what I would do, and that's what I did, right? But longer term, I want good, solid earnings growth. To me, I like growing companies in a slow, conservative way from an earnings standpoint. So like 15% earnings growth year over year is fantastic. I think when it's more than that, for me, I tend to see like a loss of clients and employees. So if I were going to sell it, I can only kind of supercharge it for so much a period of time, right? I'd be able to cut overhead only for so long and to make margins as high as they can be for so long before I would certain things would start to break. So I think that's how it's maybe different. If you're going to sell it, you would make better longer term decisions for sustainable earnings growth.
Cool. Robbie, what do you think of all that?
Yeah, I think it's interesting because the short-sighted view is similar to what I know. I've read quite a bit about the stock market, that quarter after quarter, all these companies are forced to make their balance sheets look as if all their margins are standing perfectly still and there's really no issues internally with the business. Yet then we run into a pandemic like this and we find that there's actually not a lot of cash on hand. There's a lot of internal problems that they have that are being forced because of the shareholder value that they need to portray to the public. So I agree. I think the long-term view is in the best interest of the company and ultimately the best interest of your employees. And if your employees aren't happy, then it's going to be difficult to have long-term success. So yeah, I like the way that you're approaching it.
I think conversely, if I had a business that had something that was no one else had, it worked great. There was huge demand for it, and they're off the charts growth, right? I might feel differently. I might forego earnings to drive up revenue as high as I can possibly get it, right? I might take on debt, I might take on investment in order to spur that. It's risky, right? Because you can always have another competitor come in and maybe do it better or cheaper. But, in that instance, maybe it makes sense to grow it, not focus on earnings and try to sell it quickly. But for my business and many businesses of people that, I know and Gary knows, long-term sustainable growth is good. And it also helps you in an environment like we find ourselves in now, right? So I'm glad that we were very earnings focused and didn't take a ton of, huge risk during this time now, with the virus and everything, but really more so in the economic environment that'll follow this. I'm glad that I took the road that.
So Dan, that leads me into another question, and something we talked about is recession-proof businesses. I mean, nothing is recession-proof in my opinion overall, but there's definitely industries and businesses that are way more recession-proof than others, right? We focus our businesses on maintenance of all different, facilities maintenance and utility energy sector maintenance, right? In the products we provide, because we think we're in better shape there. But even in this time now, we're going to get hurt probably because people are going to be cutting back on maintenance because of this couple, month and a half, 2 months, whatever it's going to be, that people are shut down from this virus, right? But then you see,
Sure.
A friend of mine is a leader. A couple of friends of mine are in Schaumburg actually lead one of the biggest toilet paper distribution companies in the country. They're doing pretty good right now, right?
Yeah, I bet.
And another friend of mine is a leader at Medline, a great company that sells medical supplies, right? They're doing really well right now, right? And this is a different type of environment of a potential recession we're looking at and the cause of it, right? So when I think about this, Dan, what your business also looks like one that, with great technology improvements, IT improvements, right? More work from home and more work off site. Are you guys focused on that right now? And tell us what you're doing in this crazy situation where the coronavirus shutting everybody down.
Well, it's a unique time. I've been through a lot of different things in over 30 years, but there's no playbook for a pandemic. I didn't have a pandemic playbook, so we're struggling with people. No new office. I just moved into a brand new office a week before this happened. So a great time to move into an office. So yeah, it's tough, but at the end of the day, it's from a business standpoint, it's a slowdown, right? So were we prepared for a slowdown? I was absolutely prepared for a slowdown. How was I prepared? I had a lot of cash on hand. We didn't spend every last dollar that we had. We controlled our cost. We were super earnings focused to the point to where I couldn't even tell you what our revenue was half the time per month. I can tell you to the dollar what our earnings were, right? So we were very earnings focused. The other thing that we did was we have a large percentage of our income is contractually recurring. So that's a key indicator that I watch every month. So I want to say it's, 45% of our revenue is contractually recurring.
Mm-hmm.
Those contracts can kind of go away, but we'll slow down, we'll shrink a little bit for sure. And things will be delayed, but some areas of the business will pick up. So I always felt like I like diversified set of services because in a recession, some might be up, some might be down.
Sure.
And we're seeing that. So like our talent business, no one is hiring people right now. So that business is, went to zero. But our clients are all working from home. We're supporting them. We're extending contracts, like expanding contracts. Our contracts weren't built for every single employee to work from home for an extended period of time, but we just said, look, at your contract, whether it says or not, or we're going to cover that. And we're happy to do that. And so we're helping them be more efficient and work from home. Security is a big deal. It's not as secure to work from home.
Sure.
We're helping them with things like that. So we'll get through it. And I think lots of experience. And actually, frankly, having two partners helped me. and making group decisions has been a big plus for us as well. So like,
It sounds like you're not as much of a control freak as you were at 16, 18 years old then.
nah, I kind of learned not to. I never thought I'd be in a partnership, but it's just been great. I mean, I get to go to work with my friends every day. We're super close, and
How
it's
fun is
neat to
that?
be able to have people to bounce things off of, and you know,
Great culture.
yeah, it's been great. So
You guys have core values that you live by, and that you guys display, between you guys naturally. That's part of the fabric of your organization, or no?
Yeah, we do. I mean, we try to just get everyone kind of rowing in the same direction, understand the core values from a business standpoint. First of all, what it takes to be successful, and to be financially stable. But we want to try to take care of the employees the best we can. When we make money, we share money. Last year, actually every year, right? We gave, I think last year, 26% of our profits to our employees in bonuses.
Wow, awesome.
Year before, I think was 25, and it's all usually around a quarter. And when we're not making money, then we have to scale back and everything. So we try to share it with them, because we never would be here without them.
When you go to
great leaders there too who help us.
When a company does go to sell, Dan, and you on an annual basis give away 26% of your profits, do they buy that as value and EBITDA, or do they just chalk it up as this the culture of the business, and we're not going to give you a multiple on that, on the sharing?
I don't think that they would. I mean, yeah, they wouldn't. That wouldn't be an add back. I don't think that they would say that. But what I have found is that it's very difficult to buy a professional services firm, and typically, what looks good from a spreadsheet standpoint doesn't equate well from a cultural standpoint. So, those type of things typically go by the wayside. You're like, oh, we're not going to give 26% of the money to employees when we buy your company. Well, then if they all leave, your earnings aren't going to be very good.
Right.
So I usually find that buyers, especially financial buyers, struggle understanding how culture interacts with earnings growth.
Sure.
I always felt like there was a huge link between culture and earnings growth for professional, especially for a professional services company. I think it's a little bit different for a product company.
Okay. And Dan, what I find in culture today with the millennial generation and now the next generation, what's it, the Ys? Is it Y generation's next after millennials, or Robbie, what is it, X or Y? What are we at?
I think it's Gen Z, isn't it?
Is it Z? Okay.
Gen Z, I think.
Yeah, I think you're right. Z, okay. So Z and millennials, right? I find that they want to know that the company they're working within, the business and the culture, provides value outside its own doors when it comes to giving back and engaging the community. Are you guys finding that? We sure are, and we've started a foundation years ago that, not for this purpose, but it's worked out well because those are the people that love getting involved in the foundation and participating.
We do find that, and we have charities that we support as well. We don't have a foundation or anything, or just one that we support, and I think that we're still kind of working that out. Right now, there's just a few that we do, and we get people involved. And for us, I think that kind of works a little bit better because different people just relate differently to different charities. So we had Feed My Starving Children was one that we had, and went to a food pantry and helped people that way. Or we raise money for this or that, and the company will match it. We've done that. So what we do find with the millennials and the Gen Z is that they struggle with some of the after hours type stuff. So if there's something that's charitable but it's after hours, hard to get a lot of attendance for those type of things because they want to do things on their own and their own life after work. So that's been a struggle for us.
Sure. Cool. So, Robbie, what else you got for my buddy Dan here?
I guess I'd be curious if you guys have thought about, I know you're a big proponent of diversifying the business, but is there any other avenues that you guys are considering looking into in the future from now, or are you guys happy with the status quo where you're at?
I think that we could expand a lot more. That's a topic that comes up in management meetings a lot. But I think we're good for right now. We will likely start another service offering, another practice down the road. But really what I think me and my two partners are thinking about is we want to start a kind of like our own investment fund, our own private equity fund to incubate some new businesses. So we've talked to some other people in the past and got a couple conversations going right now of people that want to start a business, but they don't have the money to do it, but they have the background, they have a plan. So what we would do is we would fund that business, give them ownership, and then serve as a board and leverage kind of our experience, right, to grow successful businesses to do that. So we'd like to incubate several new businesses, and that would probably be something that's of interest to me and my two friends.
That sounds really cool. I mean, to be able to use your expertise and business management and sales management, all things you IT, all things you do now. That's awesome. That's an awesome idea. I mean, you've got all the consultant minds you need to, maybe not all, but a big chunk of the consultant minds needed in any startup. That's an awesome idea.
I think we'd be able to leverage it. I think it'd be fun too. At this stage of my life, I mean, it'd be fun to help someone else grow something great, have them become successful and wealthy from growing that, and that would make me happy as well. So we're looking forward to doing something like that.
And it'd be in all different types of businesses, Dan, or be mostly in space that you guys are really knowledgeable in, or how do you look at that?
I think it'd be in different types of businesses. We have an affinity to professional service businesses because that's my background, but I think that our backgrounds would translate to other businesses. So we're looking at different things. I mean, there's definitely an allure to doing something different than I've been doing for 33 years. So that's of interest to us as well, but we'll see. I think it really depends on the person, right? I mean, I think you're investing, I feel, more so on the person than the idea. Sure. It's all about execution. So we're looking for someone who could really execute well. And the idea is I think, secondary to that.
Interesting way to look at it. I like that. So Dan, we're gonna round her up here. Robbie will have what his takeaways are. On the side for fun and passion outside work. I know you're a boater. I've been on your boat a couple of times. Had a blast with you and Luis on the boat. Cheryl and I. What an awesome environment that is on Lake Michigan. Are you still doing that? And what else are you doing?
We are, yeah. So we like boating. My wife Louise and I and our kids, we like boating and golf. Boating, golfing those are my two big things. I know that you're a huge golfer too. We've had some great times playing golf together.
I wish I was as good as my buddy Dan at that game. You give me a couple lessons that helped me out a few times. I know that.
So yeah, I don't know how good I am, but I enjoy it. So yeah, I've been playing golf for 45 years. So wow. I always say I should frankly be a lot better after doing something for 45 years. So
you're a pretty solid player, man. Don't kid anybody.
Golfing, boating, and then once in a while at home, if I'm bored, which I've been doing lately, is I oil paint. So I do some.
Really?
Yeah.
I didn't picture you as an artist that way.
Yeah.
Wow, I want to check.
Not a very good
out.
one, but it's kind of relaxing. Yeah.
I want to check that out, man. You got to send me some of your stuff.
Okay.
Cool. Well, you know what, Robbie? What do you got for takeaways there, brother?
Yeah, I wrote a few down for us. So first, I think going back to the beginning of the conversation, I always like to sort of take it back to where we all began here. Is I know you mentioned that during the years when you were growing up, there was nothing that you could really pinpoint specifically that led you to where you're at today. But I think that in itself, to me, was a takeaway, is that sometimes you just have to listen to your inner voice and trust the process that you're going down and know that as long as you are making moral decisions and doing what's in the best interest of yourself, your family, and those around you, you'll end up in a much better spot. So a big takeaway for me is listen to your inner voice. The second is to focus on the impact, not the money, in terms of your career path that you're going down. So you want to make sure that you're as of much value to the company as possible, so that ultimately you're indispensable to them and you can be seen as a resource throughout your tenure with those companies. When it comes to the value of an organization, if you're looking to potentially sell, there's methodologies that you've used to reverse engineer enterprise value. And ultimately that leads to better conversations during that acquisition process, both for you as well as the buyer. And in this case, just a more well-oiled machine that you guys are operating today. And that really leads me to my next point, which is to be as well-rounded as possible. And the way that I've been explaining this is to treat your career as a pyramid. And when you think about a pyramid, down at the bottom, you're always going to have a base of knowledge. And as you work your way up, it'll come to a T. And that's where you're really, really specialized. But the wider the base you are, the more successful you'll become. And I like that analogy here. And I think it applies really well to strong leadership traits. And lastly is fewer solutions done better, and making sure that you're maximizing the value of your organization for your clients and that you're seen truly as a consultant and non-dispensable. So thank you.
Oh, I got one more that I like that I know I knew this about Dan already, but it's in the book, The Laws of Success. It was written in the early to mid 19th century. I guess it'd be a 20th century, right? In the early 1900s, and it was written. It's the mid 1900s, and it was it's about a bunch of the leaders of the turn of the century. But this writer basically captured the laws of success. And one of the laws he talked about a lot was the law of being more valuable than you're ever paid for, right? And everything you do, you've got this innate ability to always be worth way more than you're ever worth, whether it's as an employee, as a young person, or your own job, deliver newspapers and mowing lawns, doing more than you're paid for, or then you're a CEO or founder of a company and you're serving customers better than anybody else, always making yourself worth more than the product you're delivering, right? I mean, it's a law that they talked about many times over, from Firestone to Henry Ford and the Vanderbilts and all these others that were the leaders of the turn of the century. So it's really, I knew that about you already, Dan, but that's such an important thing to talk about with young people, right? All you got to do is every day you're in that job you're in, strive to be worth more than you're paid for. And eventually it'll be noticed. And if it's not noticed there, you'll go somewhere else and you'll get a great job and you'll be noticed. And if it doesn't work out there, go start your own thing, and you'll find ways to serve customers on a consistent basis that they continually say, man, that product, that company, that leader always does more than what I expect, right? So that came out strong with reminded me of my buddy Dan and how you think, right? But it's a great trait that I believe is invaluable. So thanks a lot, Dan. I really appreciate you being on our Ditch Digger CEO podcast, buddy. And this would be one that we're gonna get a lot of learning opportunities for a lot of people that want to do something someday on their own.
Well, thank you so much for having me, Gary. Great to be on, and thanks for the opportunity, and good to see you again.
Thank you, brother. Good to see you again. We got to get together soon, okay? I miss you.
Let's do it.
And when all this stuff blows over, we got to get together with the girls. Otherwise, bud, until next time, we'll see you. We'll see you soon. All right.
All right. Thanks, Gary.
So from Ditch Digger CEO, we're out. See ya.